Welcome to another video. Luis from TradeOptionsWithMe.com here. I hope you're all having a great day. Today's video is all about comparing day trading to swing trading and investing. So after watching this video, you won't only know all the differences between day trading, swing trading and investing, but you will also know which of these trading styles is best for you and why. Day trading, swing trading and investing are three very different trading styles. It's important to pick the right one for you because there's no one fits all. Not every trading style will fit your personal preferences. But after watching this video, you should know which of these styles fits your personal preferences. So let's get started. I will start by presenting day trading. So what's day trading? A day trader opens and closes his positions within one day. So a common time frame is a few minutes to a few hours. So it's a very short-term trading style. An example trade could be you buy 1000 shares of XYZ at 10 AM and sell those 1000 shares of XYZ half an hour later. That would be a typical day trade. So day traders try to profit from intraday price swings, so from relatively small moves. They don't try to predict the next huge trend in an asset. They just try to predict small momentum moves in one direction. Often day traders base their trading decisions on technical analysis, as fundamental analysis or fundamentals don't really move asset prices too much in the very short term. And you can day trade almost any asset. You can day trade stocks, penny stocks, forex, futures and other assets as well. So there aren't too many limitations here. But even though day traders only hold their positions for very short times, that doesn't mean that day traders only trade for a few minutes or hours per day. Usually day traders monitor the markets for many hours and they have to be ready to enter a position almost all the time. So I would say that day trading takes the most time of all three trading forms. Day traders definitely have to monitor the markets more than longer term investors or even swing traders. Apart from being able to monitor the markets, day traders also have to have the ability to act rationally in stressful situations. Often day traders have to make important decisions in a few seconds. So day trading definitely is not easy. It's very important to know what you're doing when you're day trading, and you should also have some good risk management skills. In fact, financial regulators like FINRA actually find day trading riskier than all other trading styles. That's also why they created the PDT or the Pattern Day Trader rule. And this rule prohibits people with smaller accounts to day trade more than 3 times in a 5-day business period. But if you're interested in the PDT rule and how to avoid the PDT rule, you should check out another video of mine. I'll leave a link to that video in the description below. Next up is swing trading. So what's swing trading? Swing trading is a little longer term than day trading, but it still focuses on short to medium term price moves. A swing trader usually holds his trades for a few days. So swing traders try to profit from slightly bigger moves than day traders, but they still don't try to predict the next huge trend or they don't try to find the next Microsoft or anything like that. They aren't investing in an asset. Swing traders just try to predict smaller swings in an asset's price. Swing traders often base their trading decisions on news or technical analysis. swing traders usually don't use too much fundamental analysis because, as I said, they aren't investing in the stock or the asset or whatever they're trading. Once again, you can swing trade almost anything. You can swing trade options, futures, stocks, penny stocks, forex, or something else. An example of a swing trade could be that you enter a trade on Monday and you close it on Wednesday. Swing traders still have to have the ability to monitor the market, but they don't have to sit in front of the computer as much as day traders would. It's okay to only check your positions once or twice per day, as long as you have managed your risk when entering. Generally, swing traders should have a good idea about what's going on. They should have some general market awareness. They should be aware of upcoming important events, of stocks that they're trading, like earnings or dividend payments, or other bigger market events, because these events can impact different prices. So if you're in a position that has upcoming news, you should be aware of that. Day traders don't have to be as aware of these things because they are only holding their positions for a few minutes to hours. Now let us move on to investing. Most of you probably know what investing is. It's buying and holding positions for the very long term. So investors don't really care about short-term price moves as long as the asset's price moves in their direction in the long run. Most investors base all their investment decisions on fundamentals, so they look at the fundamentals of a company or an ETF or whatever they're investing in. So they look at the fundamentals and think that the company will do well in the future and thus the stock price will increase as well. Normally investments are held for many years. Investors should have some economic understanding. They should know what's going on in the economy because that impacts the most prices dramatically. Furthermore, they should have some analytical skills. They should be willing to go through statements of companies and analyze different sectors, balance sheets, earnings, and more of that kind of stuff. Investors don't have to check their positions or monitor the markets constantly. It's totally okay to look at your investments once or twice a week or even less than that. This is acceptable because investors don't really care about short-term price moves. Investors should also be aware of bigger market events that could impact prices dramatically. As you now know what day trading, swing trading and investing exactly is, let's compare these three. Let's find out which of these three trading styles is best for you. So like I just said, day trading is a very short-term trading style, whereas swing trading is a little longer term. It's like medium-term, short to medium-term trading, and investing is very long-term. With that being said, almost the opposite is the case when it comes to monitoring the market. Day traders have to monitor the market most. Swing traders are right in the middle. They still have to monitor the markets ideally every day, but not as much as day traders, and investors are totally fine if they only monitor the markets and check their positions once a week or even less than that. Some key skills that day traders should have is the ability to act rationally and fast in stressful situations, and of course the ability to monitor the market. A key skill that a swing trader should have is market awareness. He should know what's going on, what's moving, what's not moving. He should know about important upcoming dates and more of that stuff. Investors should be patient and have some general economic understanding. So now you have to ask yourself the question, which of these three trading styles fits best to you. For instance, if you have a full-time job and can't actively monitor the markets, then day trading probably isn't for you. Then you should rather try to learn swing trading or maybe even investing. However, if you aren't very patient and you're not willing to hold positions for ages, but you have the ability to monitor the markets and check the markets every day, then you could look at day trading. In my opinion, the most beginner-friendly trading style is swing trading. It doesn't take as much time and it isn't as stressful as day trading. Day traders often have to make important decisions in a few seconds, and if you aren't completely aware of what you're doing and if you're somewhat new to trading, you're probably not able to do that. Swing traders have the ability to think a little longer about what they're doing, so that's also ideal for beginners. But with that being said, it's important to understand that this isn't an end-all decision. You can always try out a different trading style later on, or even swing trade or day trade or invest at the same time. There's absolutely nothing wrong with that. Nevertheless, I recommend choosing one and sticking with it to begin with. Instead of trying one thing for a few days or weeks and then trying the next and so on, try to really learn and find out how one of these trading styles work. Really stick to it, really commit and dedicate some time to learning it. Otherwise, you probably won't be successful with that trading style. So in conclusion, no matter which of these trading styles you think is best for you, it's important to educate yourself first. Education is the key to success in trading. If you don't know what you're doing, you will fail. It doesn't matter if you're a day trader or a swing trader or investor. If you don't know what you're doing, there's no point. So find some good education, learn about a strategy within one of these trading styles, and actually find out how you can make money. Don't just randomly day trade or swing trade or invest in random assets. That won't work, believe me. Thanks for watching. I truly hope you enjoyed this video and I could help you with your decision. If you have any questions or comments or feedback or anything else, please be so kind and let me know in the comment section below. If you enjoy content like this, make sure to subscribe. Otherwise, have a good day and see you soon.